Welcome to part 5 of the tutorial on how to complete and submit the IT12EI return for approved exempt institutions. In the previous video, we demonstrated how to complete the additional information and trading activities by the exempt institution. In this session, we will explain the completion of the taxable income or loss and tax-deductible receipts. Taxable income or loss relates to income or losses the exempt institution incurred with regards to the trading activities and business undertakings. The amounts completed in this section must correspond to the amounts reflected in the annual financial statements for the exempt institution for that financial year. Taxable income or loss from trading activities is the amount that is calculated by subtracting the basic exemption and expenditure in respect of taxable receipts from the total receipts and accruals which are subject to tax. The taxable income source code is 3022 and the assessed loss is 3023. The next section is capital gain or loss from disposal of assets used to generate trading income, which means any capital gain or loss made on the disposal of an asset which has mostly been used in the carrying on of non-public benefit activities or in the production of non-exempt income. The capital gain source code is 4250, and if it is capital loss, then the code is 4251. The next section to complete is tax-deductible receipts issued in respect of donations, Section 18A. Tax-exempt institutions that have been granted Section 18A approval must complete this section in full. Tax-exempt institutions that have not been granted Section 18A approval should not complete this section. This section provides information on the number of Section 18A tax-deductible receipts issued by the exempt institution to donors giving donations to the exempt institution. The exempt institution is also required to provide the total RAND value of donations for which Section 18A tax-deductible receipts were issued. Only indicate 0 if no receipts were issued. The Section 18A exempt institution need to answer the next questions by either choosing Y for yes or N for no in respect of Section 18A donations. If Y is selected on the question, Section 18A donations received were spent on both Section 18A approved activities and non-Section 18A approved activities. Then the Section 18A exempt institution is required to have an audit certificate as part of their supporting documents. The audit certificate should be kept for a period of 5 years. If the exempt institution is approved in terms of Section 18A, 1b, as a funder, the exempt institution must indicate if the required amount or percentage of the donations received was distributed. Distribution schedule of the donations received for which tax-deductible receipts were issued must be prepared and retained for 5 years. After completion, you can submit the return by clicking the File Return button. You may click the Save button if you wish to submit the return at a later stage. After clicking the File button, click Continue to proceed. You will then be redirected to the income tax work page, and the status of the tax return will reflect File through eFiling. And that concludes part 5 of the tutorial on how to complete and submit the IT12EI return for approved exempt institutions. Thanks for watching. SARS at your service.